Hello, good morning, everyone. How does my sound? Thank you, Andy. So, hopefully, everybody can see market profile and the market internals. Yesterday, we were finding out that my market profile is a test version. So there's going to be some lag or delay, but what's important about that is we should use it as a tool to see how it fills out, what type of profile are we going to get? Are we going to get a P, a B, or how does that look? If you guys can look at market profile right now, I'll bring you guys there. I've marked off some lines here, which is if you listen to the PPP from Scott Schneider, there's a couple areas of interest, which is a double distribution right here, which I've marked off here and here, and then obviously the low of yesterday. So I saw Peter do this for you guys one time. So these are all kind of like signposts. I'm not saying we're going to do this, but if we come down, these might be ideas of interest. So one, here's a level. If we come into the prior day's range, that's another level. Two, and then if we go three. I'm not saying this is going to happen because we are opening up with an opening drive higher. So let's sit back and see, what we got coming, and then we'll dive into pick up where we left off yesterday. We left off with Larry D's comment about looking at Netflix with you know using that as an example of ratios and spreads and looking for that. So right now I'm looking at the ES, and you can see that we're above the 5, 21, and enhanced VWAP. So we're looking pretty bullish. Just looking at the sector boxes, we've got 1, 2, 3, 4, 5, 9 green so far, no red. And we've got the NYSE at 2.8, NASDAQ at 4.6 for the breath. So the question here is what I'm looking at and what Scott mentioned in the PPP is this a gap and go situation, or what some people might say a gap and crap, where we open up higher and then start coming in and filling the gap. Casey, hold on 1 minute. I'll take a look at that. We want the NQ VWAP. Which we've just started to test and bounce right now in the NQ. So I've got NQ VWAP, the enhanced version is 19768. And I typically show a regular VWAP. We're just breaking that enhanced version on a 5 minute. Regular VWAP NQ 19751. So again, we're just waiting here to see how the market opens up, and then we'll get started. And I'll start showing my NQ chart here for you guys. So Casey, can you see that? The magenta dotted line is that's our midnight VWAP reset. As you see, we're testing VWAP in the NQ, and we're trying to resolve a pinch on the 5-minute for the 8 and 21. And with FOMC coming, I'm very tentative entering any new trades and so forth. So that's why I'm kind of pausing here to just see the market open for the first 15 minutes, see what happens. And then looking back at our trades, we've got a trade in TLT, which is long term. We're by design light on our trades currently. So TLT is a long term trade. That looks great. And we did a trade in Costco the other day, just for example, on Delta and how to put your portfolio for a Delta neutral position. And that trade's looking good as well. Fangman, we've got Apple down but pretty much flat. Amazon's up. Nvidia's pretty much flat. Tesla's up 5. IndieX 5. Microsoft is up 9. And you can see that we've now bounced off of VWAP. And let's see if we can take out this overnight high, which is in the ES 5727. And the new contract's out, so we are looking at the Z contract in the ES versus the U, which we were looking at yesterday. And we switched months since there's been a day of trading and there's some new volume in the new contracts. Craig, yes, that the Z contract's what we are in. Okay, as we're opening up, we could see the weighted is printing positive. We've got ticks above zero. The tick chart is painting mostly green. We've got the NYSE 2.4, NASDAQ 3.7, 3.37. So I'd continue to see if we're going to break this open right now. And come back down to VWAP. And the more times we come down and test VWAP, the more chances are that it'll break. And when I say break, I mean breaking to the downside on the 5-minute, which we're showing. So we just hit VWAP. And the weighted is trying to print a negative print. So we'll see what happens here as we go forward. So as we look at that, Larry, are you in the room? And then we can start looking at the Netflix ideas, which I pulled up yesterday, and we could start rolling with that. Unless you guys want to talk about something else. Is there anyone in the room that's maybe in trouble first, or something that we have to look at, and then we can roll into maybe ratios? Yeah, so let's start writing some of these ideas down, which we've got UPS, Google, Abe, yes. On my chart, so the magenta dots, that's the enhanced VWAP, which is the midnight reset. It's I also have this gold colored dots that you guys can see. That's I put that on my, Peter doesn't show that because he has the enhanced VWAP, but I include this gold colored or yellow colored dot, which is normal VWAP right out of the box. And I do that because other traders are looking at that as well. Yeah, Peter uses the one that resets at midnight, which is the magenta. You can see my cursor on. Because over time, you can see that we'll bounce off of VWAP right here, the enhanced version, and then it breaks, right? And then it bounces off of normal VWAP right out of the box or right out of TOS or your other trading platforms. Now you can see that we came down to it, broke it, but we're bouncing off normal VWAP. But I definitely keep an eye on this. We're going to switch to a couple other charts, but you can see that we're bouncing. You know, if you're trying to take a long trade, I'd wait until we cross the open. If we can break trend, cross the open, so forth. If not, I would stay short, especially if we hit this previous day low and break. I'd stay short some more. So those are some day trading tips for you guys. But again, you know, I'm really tentative about the markets just because FOMC, we could be playing a lot of tricks here of, you know, this, we gapped up and now we can come down and fill the gap. And then if we come down and fill the gap, you know, do we bounce off of that? Which looks like on the ES, 5703 is the top of the prior day's range, the value area. Sorry. So let's see if we can actually make it down there at 5703. And you can see that on the profile chart. QQQ, so I'm reading the comments, RSN, QQQ 47.9. Yeah, I mean, you could sell a call and sell a put and see if we you know, start trading in a range here, which definitely could happen. What I don't like is the VIX is, if we look at the VIX down here, you know, this is really low for the VIX. And when it's that low, sometimes when you sell a put and a call and expect a range, it'll have you trading pretty close to near the money. And then you can blow out that range pretty easy. So that's one reason why I'm kind of tentative, right? Because we could actually flush pretty hard here and then come right back up. Yeah, no negative ticks yet. We're still painting green, but you can see the weighted turn negative, and but the breadth is in the Nasdaq is 2.5, NYSE's 2.2, and we've got the first green sector is Infotech. First red sector, sorry, red sector is Infotech. Dean has a good point. Yeah, we're opening up, and you can see that we kind of went from the highs to now we're kind of pushing at the lows of the day, and you can see that the sectors are all starting to what do you want to say? Give back, starting to turn possibly red is a good indication, because we had more green or light green, and now there's some negative sentiment. Anyways, let's start looking at UPS. So let's go with a daily chart here. So it looks like we've got earnings coming up on 10/24. Obviously, we got FOMC coming. And this is for Mylan. Is that how you pronounce your name? But what are you looking for with the trade? Are you trying to go long, or obviously here we're trying to stay flat as much as possible with Wednesday coming up. And Wednesday we're going to start looking at. We used to do an FOMC trade in the room, so that's the idea we're going to look for. And that document's in the file section. So if you have not downloaded it, I would. And you can see this thing had a pretty good gap on earnings last time. So looking at UPS, you can see that we're below all these key indicators. We're obviously consolidating down here. And I'm not sure if you want to go long or short, but again, if you can let me know what you're thinking or what you want to do. Because if we break this low, I definitely have some type of short structure down here where you're buying puts. Again, after the FOMC meeting Wednesday. If we come down, break this, I definitely have some type of short structure, but I definitely want to be out right here. Right? To me, this does not look like a good chart. Unless you really love UPS, maybe we can look at selling puts down here. I see there's very little premium. Even if you win, Peter doesn't do this in this trade, but I do this with a number of positions. If you try going 30 days out and you sell puts in stocks that you really like, but this stock's still downtrending, I'd wait. You know, because the expected move up here is $7. This thing can come down. I mean, it does look good as far as it's starting to consolidate, but you want to see if it could break this, 133 high possibly. Once that breaks, then you can try to see if it comes up to this downtrend line. So that's UPS, and then Google. Looks like this is coming off its highs. There's you can see that we've had the 821 pinch here. I would, before entering this trade, I would see if we can break this 8 first. If you could come up here, break it, and go. Because sometimes what will happen is these guys come up, and then they come down. They'll find resistance at the 8, resistance at the 31, or resistance at VWAP. But I mean, long term, I'm definitely bullish on tech. But you can see right now, here's your wedge pattern. It just bounced off of this. Want to see if it can get up to here, and if it's going to trade in here or break out one way or another. See which way that resolves for Google. Sometimes what I like to do is put a fib on this. And see how much it retraces back. So after FOMC meeting, I definitely watch this area, see if it, because it looks like it's catching support at 150. See if it could keep going. 137. Let's see if there's any, see if there's any premium to be sold at 137. And it doesn't look like it. Same with up here. We're up here at 168. Short term. I look at some of these calls, like a call setup, but that's not going to work, right? By looking at that. So as far as Google's concerned, I would see and wait by looking at this pattern here, and I'd see if we're going to break out. If we chop around here, and then we kind of break out to the upside, and then play it that way. Want to look at a daily chart? So here's your daily chart of Google. Definitely looks bullish, right? Looks like we're going to go up to and test this trend line. Any other thoughts on Google? So it looks like we're pushing up. So we broke that overnight high in the ES. And we're continuing with the 821 stacked on each other and VWAP below that. So we're above all of our key indicators. So this looks like it's a potential gap and go, and we'll see if we're going to hit the all-time high. Right, Bob? Yeah, exactly. And then we've got FOMC, and then we'll see what happens here. Yeah, and sometimes I like to look at the cash market because we've since we just switched contracts, and then I have my levels in SPX that stay the same. I haven't updated any levels in my ES. But you can see we hit that 826 high. The shaded area had some poor structure for me. So I'm going to remove that drawing because we broke that. And so I put an alert here at 56.69. If we break that, that's another level where we're going to go like a signpost. If we continue up, it's definitely bullish. But a lot of times I like to come in here and fill these gaps in and see how much we retrace. And it might not happen today, but over time you can see what. Use this as different levels to trade off of. And again, if people haven't heard, I have Window Trader up for you guys from Terry. Terry gave me a trial subscription, and with that trial subscription, you can see that it's lagging. So don't trade off of the Window Trader. I would trade off of your own system. but we can use this window trader as a tool to see what type of profile and shape we get. How many people think that we're going to hit all-time highs today in the cash market? I mean, it definitely looks like it, right? Keep pushing up. Let's look at internals. Definitely bullish. We had two. Let me pull you guys over there. Pull everybody to market internals. We definitely had, two 1,000 tick. We hit two 1,000 ticks. We've got mostly green painting. And now we've kind of switched to 3 out of 3 sectors are dark green with 1, 2, 3, 4, 5 sectors light green. Infotech went from dark red to pink. NASDAQ, we got 3.1, 3.14, NYSE 3.1. And it looks like we've got our ADs definitely pegged. So people are buying. Larry, we haven't missed the trade in Netflix. I'm just watching the ES because we're approaching all-time highs in the cash market, SPX. And Larry, you bring a good point about, hey, are there some low debit situations in the SPX? And that's kind of what we're going to do on Wednesday with FOMC meeting. We're going to do some small cash outlays for a play for an upside and downside. And we might just do the downside. Looking at that trade. Because there's a potential to move both ways, right? We might, and we've seen that before where FOMC meeting minutes or the cut comes out and we move in one direction with the market, and then we could capitalize on one side. And then when they start speaking, the market reacts a different way, and then we can catch a downside move, or vice versa, right? Yeah, you're correct, Larry. For your IRA, or any type of 401k situation, since we're at all-time highs, if you don't mind buying protection, that's a good play. Buy protection now, spend, you have to look at your portfolio and see how it's weighted, but spend, I don't know, 0.5% on something for that's out for a month or a couple weeks to see if you catch a move to the downside, just to protect your portfolio. instead of having a big drawdown. So it looks like we're moving up, guys, or everybody. Definitely bullish today. So let's start looking at Netflix. And I did some levels last night. But overall, we used to do a lot of ratios and 1-2 and 1-3 type ratios in this name. And what I'm going to do is I'm going to get the epic pin out and try to explain this a little bit better. So you're going to lose screens, lose the main chart here for 1 second. Okay, hopefully you guys can all see that. Can you see this? The epic pin? Looks like it. Okay, I'm going to try to summarize this, but a lot of Peter's plays, or I should say with a ratio. Well, when we talk about ratios, you know, Toss says ratios slash back spread. So ratio back spread isn't a term. It's either ratio or back spread. And in this option advisory, a ratio, we're going to do +1 -2. Meaning you're long in the front, which is a +1, and then you're short in the back, either 2 or 3 options. And a lot of times we say this is you're long before you're short. And when that happens, the perfect setup or the best setup that I've seen that Peter does is that there's a trend line, right? There's a stock that's coming like this. Maybe it goes like this. Hits a trend line, comes down. Something similar, right? Where there's a trend line here. And then a stock's kind of doing this, where it's going up and down, up and down. And what this is this is resistance, right? Resistance. So this is a level that should hold, or you have faith in that'll hold, and sometimes you'll have multiple different other levels that that you can sell against. And that's, you could do these trades anytime, but that's when I've seen it work the best. So with that being said, that's a lot of times where I've seen, hey, we're looking for bullish stocks that are going to hit that resistance line, and we want to sell like right at the resistance line. So the question is why do we want to sell at that resistance line? Because when, and maybe I can do this with looking at the trade tab for Netflix. And correct me if I'm wrong, but I look back at Netflix, and a lot of times we were doing spreads that were somewhere around 15 to 20 wide. So I'm going to pick something here. Well, actually, if we go to the Analyze tab, I'll show it. Because I've got trades that we set up or that I was looking at. So I was looking at 1.3s, 1.2s, right around in here. And you can see that it was somewhere around, and this is something that we would look at if FOMC was not happening, right? So here's a credit play, 745, 760, 15 wide, somewhere around there. Larry and I, we were talking off through email about small debits, right? 6 cents here, some of these plays. Now, when you go out here, when I was looking at these options, they were all pretty cheap. And that's part of the issue is when these options are that cheap, it's hard to get these for expansion. And Larry, chime in if you think, if you had any strikes that you wanted to look at. And yeah, Netflix needs to be 20 wide for that to expand. So one, I think this is, if we go 10 days out, I think that's too late. If we go 3 days out, can we get up here? It's not there. Do you see how the options are so cheap? And that's kind of why we haven't looked at that. And also with Netflix, I was looking at that chart when I was talking about how there was a downtrend line and the stock would go up and resist at that downtrend line. That's not what happened. you know, Netflix is a different pattern. This is in, it's like breaking to all-time highs, right? It's breaking out. So it's kind of set up for a different play. You could see this. All-time highs. Sorry, my machine kind of moves slow for me. But you could see a good trend line that it's coming down, bouncing, coming down, bouncing. So that, to me, Netflix, this would be a great credit collection play. You know, down here, as far as that 1-2 or 1-3, that doesn't look, you know, I don't see a play in it. But Larry, if you do, let me know. But you know, we've got earnings coming up on 10/7. You want to look at a mullet? Yeah, you could go. Yeah, mullets are great. It's just you know, right now I was looking at ratios, but yeah, yeah. If you're bullish on a stock, uh, definitely the easiest play is if you have a fly, or you can play for a mullet as well. Reverse mullet, right? So so with that being said, maybe I can explain the ratio a little bit better. I'm going to try. So when we do a +1, -2, and Larry brought this up, which is in Netflix, and this happens different for each stock. But I wanted to bring this example up to describe ratios for people because we kind of get confused, and especially with me when I was first introduced into the room, I didn't know if Peter was selling, buying, or ratio, what a ratio was, that sort of thing. So in Netflix, more times than not, you would buy the front, sell the back, sell 2 times the back as the front, and it'd be 20 wide. I've seen them do maybe 15. And the idea is when it's this wide, what we're expecting is that this, the front, and we're talking about the call side, right? That front is going to gain in value. So he's thinking that the stock's going to go up, right? Your front call is going to gain more than your back, more than the back call by 2 times. And then that over time, which, you know, it's probably like 3 days out when you do this, that your back, the premium decays. And that what happens is that that's your profile, your risk profile, that as you move towards your calls, the ultimate is to end up here, right, in your profit tent. But sometimes you can catch this early enough where your front option has expanded more than 2 times your back. And that's what happens here. What also happens is that when you see, and let's say it's not 20. Say that, each time we buy one, sell two, and this is a 5 wide. And you know that typically we sell like 20 or 15, right? It's supposed to be 20 or 15 for expansion. Well, if they do this and then someone's trying to get a credit for, I don't know, let's just say it's 50 cents. This is a credit play, right? This isn't made for expansion. That means that we don't think we're going to go to this front strike. It's 50 cents. So it's definitely a credit play. Yeah, and Keith brings up a good point. So if you guys have points that maybe I went over real fast that I didn't stick on or stay on topic for long enough, definitely hit the first tab, which is with these options with a ratio 1 + 1 - 2, you're looking for expansion or credit, but with little time, right? And that's why it's called weekly options. So we're either doing 5 to 3 days out as a time horizon. Yeah, we're going to get into that. That's a good topic, Larry, about, hey, how can we set this up? And again, Netflix isn't the perfect example. I just wanted to go through this. So we went through, if something's, typically 20 wide, now we go down to 5. We're just trying to get a credit out of this one, right? So when it's 20 wide and typically we'd have a low debit situation. So let's look at that. And I'm using Netflix as an example, but I really want to. This is something that you guys should start writing down in like a Bible or something, a trading Bible. So what I want to and I'm going to leg into some of the stuff Larry's talking about with a 132 and a 121, because it happens with multiple things. So I'm just going to pick a strike here. And maybe we should do a sector market rundown before we get too further here. Someone said, yes, Infotech's dark red. We've got 3 dark green, materials, energies, consumer discretions, dark green. But obviously, Infotech carries a lot of weight, which is down 5.2%. And then we've got the weighted AD. It looks like it was negative, turned positive, and now we're coming down. The NICE is 2.8, NASDAQ 3.6, and we've got ticks that are middle of the range with more paint to the green. But ADs for the NASDAQ and NICE are definitely up there around 1400. So I see some comments about a mullet. So a mullet, let me come back here. A mullet is, and let's look at the call side, right? +1, +2, +1. So it's a form of a butterfly, but the front is wider. I'm going to try to draw this smaller than the back. So let's just say it's 20 wide in the front and 10 wide in the back. Because what happens is when pricing's going up, maybe I should draw this back the other way for you guys. That's a 2, by the way. +1. Okay, as pricing is going up, that's what you want. This is 20 wide. This is 10 wide. Ultimately, on a butterfly, you want it to end up right in the middle of your butterfly, right? So you get a plus 20 points here, and you get your premium decay on this, because this is, oh, sorry, you're right. It's not plus, it's minus. -1, +2. No, I'm messing up here, sorry. Let's start over. Just nervous speaking on this topic. Okay. Butterfly. +1, -2, +1. Okay. Thank you. Thank you for correcting me. Sorry about that. Okay. 20 wide. And 10 in the back. As pricing's moving up, right, we want to capture these 20 points. BW, if we can hit, I'm going to move this. This would be the perfect ideal spot, right? On your butterfly is always the center strike that you're selling. So you capture 20. As we go up, we capture 20. If we blow through this, right, if pricing keeps going, and you blow through a mullet, no fear, because you made 20 and you lost 10, so that's +10. So on the call side, that's a bullish play. Now, if we go back a little bit more, what I want to show you, and if you didn't get this, it's okay. Let's go through it again, which is a mullet, BWB, or whatever. They're made up of, and you can leg into this, right? With +1, -1. That's one trade, and that's 20. Your width is 20. Then you could come in here. You can buy this trade, and you can sell the back. And that equals your +1 -2 +1, assuming that this is the same strike. Now you can spread these strikes out, and then you can make a different type of structure, which it still works. So that's the reverse mullet, RM. And you definitely want it to move in your direction, right? I'm going to clear this. Any questions on the reverse mullet? Or should we talk about it more? Hopefully that was helpful. Reverse mullet, Chris. So it's party in the front. So that first 20 is where you want your profit. Okay, got it. So what I definitely want to, let's take a step back though. And what I want to show you, I jumped to the reverse mullet just because people were talking about it. And just using Netflix as an example, right here, let's just say that you came in and you sold this 665 for whatever, right? And we'll jump into this butterfly and that sort of stuff and adjusting. But and I'm bringing this up because some people in the room brought it up, and this was a good lesson, is if you went in here and you're short this strike and it's moving against you, moving, in this case, this is a put, if Netflix is moving down, how do you adjust this? You can cancel the trade, right? Buy it back at a loss. You can roll it to the next week. But sometimes the best time is to come in here and you go long, depending on whatever your bias is, long before short. It's just 670. So if this is going against you, and you do this, that's how you adjust it, right? If you're short something, long. And we did this in a trade. There was I can't remember exactly what trade that was, and it was going against us, right? So that's a single option, how to adjust, right? And you can do it on the call side as well. And the reason why I'm showing you this is because Larry brought up a comment of, well, I want to get into something and then we can adjust it. And that's a lot of times that's the best. Oops. That's the best outcome, right? Sometimes you get in a trade and then you want to adjust it, and then it's more profitable. So that's how you adjust a single option. Now, I like just a regular background. And I just got an alert, so it looks like we're hitting all-time highs in the cash market. Definitely a good day if you're long. Okay, so adjustments. So what Larry's talking about, +1, -2, +1. So there's a lot of ways to adjust these flies, but let's just say it's a call side again. Market's going up. Sometimes there will be a lot of credit in the middle strike that you want to take advantage of. And then you might want to do this, and you want to sell vertical, right? And then that's where it's 1, 3, 2. Add. You're adding dollars, right? For credit. Because you sold this vertical. Another way is, let's just say that you have a regular butterfly here. So it's 10 by 10. And you know that this strike here, you're not gonna breach that. You've been in this for a while. Instead of just taking this off, you can move this front up $5, right? So then you'll be a +1 -2 +1, and it's going to be shorter. And then you've added more credit. You've harvested, as some people say. So the next thing is, how do we turn this into what Larry's talking about? With a reverse mullet, right? Where you might be moving into this butterfly and you're concerned, or even before it, maybe you're before the butterfly, but you're in the butterfly and you want to adjust it. Well, you can move this back closer. So just like you did on the front, you can do the back. So you can sell this back and buy something here that's 5 wide. And what is that going to do? Is that's going to put you into the reverse mullet. So now if you're trending up, doesn't matter if you blow through this side. Yes, yeah, that's a debit. It'll save you if you think you're going to blow through your reverse mullet. That's a debit play, right? But sometimes, it's beneficial to pay that debit than lose out on the whole trade. So I'm going to go back to Larry's comment and just see what he said here about adjusting and see if I covered that. So right, so with a butterfly, we talked about you can adjust the middle strike and get and add more debit there, add more credit by selling the middle strike. We talked about moving the front strike up towards the middle strike for additional credit. And then if you want, you can adjust the back, which was mentioned for a debit, and do that. And you wouldn't, and that would put you in a reverse mullet situation, and so forth. And then Rick M has a question. Well, what about a neutral play? What do you mean by neutral? Like, because no matter what play you do, you're gonna have to. You're either gonna have to pay for something, take more risk, or so forth. I mean, maybe a neutral play is. I mean, I guess it depends on the situation. Say that you're in something like this, right? Stock is consolidating. Yeah, say that you put this on, you paid for this butterfly, and the stock's doing this. You thought it would come up here. You could always sell puts down here, right? Do a put play for credit. Does that make sense, Rick? Because if you're definitely, if you do this play and the stock's right here, you want to you want it to move up, you're going to be positive delta. You can use that delta play and sell put credit. And it really depends where you're at in the structure, right? Because if you think you're going to blow through this, if you've done this and you think you're going to blow through, you need to adjust this back, move it up. That was the debit option. So as I'm doing this, you can see that the ES is starting to pull back on the 5 minute. We've just breached that 8. And I'll get off here in a couple minutes here, but why I wanted to do this is that when you see the NDX trade, and Peter's done this a couple times. He did a 1 3, 2. And that's hard. That's hard to adjust when you get in trouble. When NDX moves really fast against you. But when he was doing these plays, I started looking at a 1-2-1. So when you see this, it's typically, me trying to ask Peter some questions about it, but I like doing these with 50 wide. This is the 0 DTE stuff. 200 for a 50-cent credit. So I want to set you guys up for that. That's what's coming that I'm looking at, and we did this. And so going back, when we start coming up, and this front expands, that's where we're getting paid. And sometimes if you can get into here at expiration, you could get paid. And if we hit here, that's a whole 50 points. Right? And so all those adjustments, if a lot of times we can get paid for 50 cents and then we can come out of this for $1 and do it sooner, or $2. And we'll try to do this in the room. So with these adjustments, and if this credit's not working, if let's just say we don't even get up to these strikes, and Keith, I'll answer a question in a second. We will, this just expires for 0, right? And we get a 50-cent credit. Now, if we can get some movement, this front expands, sell for 1 or 2, or we can harvest this. You can take it off for $1 or $2, or you can move this up, and then we need some more room here. And we do this. And make this 25 wide. And we can collect a credit by selling this spread that's inside this. Anyways, that's kind of why I wanted to do this real fast, and hopefully, you guys took some notes, and it helps you kind of defend other trades. And that's why I talked about Netflix. Right now, I don't think it's a good example to put on a trade in Netflix that's a 1-2 or a 1-3. But hopefully that helps. And then we've got a question from Keith, RSN, and Larry. So RSN's got some good points. With the NDX trade, I do that out of the money, right? And I do that fairly out of the money, 400 points at least. And it typically happens in a high VIX environment. So that's right. It's not setting up now. For those ratios, you do that at a resistance level. NDX, yes, I try to pick the middle strike at some type of resistance level. And since we're at, near all-time highs or close to all-time highs, it's a little hard to do that, because when a stock's going up or an index is going up, you don't have any data as far as, where people are trapped or what's a resistance level. And RSN talks about the 1-1-3-2 type structure, that you might put the first leg at your resistance level. And Larry D's bringing up a good point about you don't want to be on the width. You can't be short. So like that IndieX trade, I found that 50 wide is like okay. 75 is, when I'm working with Peter, 75 is actually perfect. But we found that you have to pay a debit for most of that stuff. So when you enter in a 75 wide by 200, that you usually typically have to pay a buck. So you definitely have to have it increase in value, versus the 50, you get a credit. And I definitely like these plays where we do a credit, we receive a credit, and then we sell for a larger amount. Okay, so SPX, we're definitely bouncing off this 31 here on a 5-minute. And I wish there was more. There was a stock that we could just jump into and we can just start explaining this better, because you always learn trial by fire type situation. So let's come back here to the ES and see what's going on. So it looks like we came up to the highs, came down, we hit the midnight VWAP, you could see, and we bounced off of this. And we're right at the overnight high right now. Market internals, we have 5 sectors dark green, weighted AD still positive, and we've got more green paint on the ticks. NYSE's 3.4, NASDAQ's 3.45, and last time, we're slightly higher on the ADs on both NASDAQ and NYSE at 1,500 plus. So we sold some puts in Costco. That's looking good. TLT's looking good. And then we had a trade in BITO, and that looks like that's we're going to let that just expire worthless. You can see that I've had some other trades in Apple and CMG if you're looking at my screen. RSN, yeah, I agree. I mean, it's kind of choppy to up, right? But you just never know what these guys are gonna take off. So you're selling strangle, zero DT. How are you picking your strikes? I'm just reading his comments. You know, RSN is coming in and he's selling QQQ strangle, zero DT at certain strikes. Looks like he's got half profit, and he looks like he does it before the Fed days. And you know, I've talked to Peter about this. It's when you're in the room talking, there's something that I call a room risk, right? So I'm not trying to influence people one way or another in their trades unless we have a super high probability of a setup. So before I get off, does anybody have any questions or anything else we want to go over? We kind of went over ratios, what they are, how to leg into them, how to make them a butterfly. When you're in a butterfly, how to make them, the broken wing is when you make the strikes wider on one side than the other, how to adjust them, how to add credit to it, and how to adjust it for a debit and turn it into a mullet in case it just blows out your upside. And then you guys can reverse any of that teaching for the put side. Oh, the jokes. Yeah. No jokes. The only one that I heard was something about a cookie. What was it? Why'd the cookie go to the doctor? Because it was feeling crummy. I have a bunch of kids, so that's. I just have kid jokes. So Larry, yeah, I mean, Black Swan stuff. I wasn't really taught that way with ratios like a 1-2, but I would look at that's a total different. Have you So Black Swan, I do have a topic. I've done them before, but I'm not really prepared to talk about that. But instead of doing a ratio where you're +1 -2, is that what you're thinking? I would start looking at minus, and this is a total different concept. Don't just run out and do this. Maybe we'll do it some other time when I put something together. But you can go 3 months out in time, and I'm sure there's probably a video on the internet, right? There's everything on the internet, but go out 3 months in time, 2 months in time, and you can do a -3, sell 3 puts, and then go further down the chain and buy 5. And if you use that ratio, and that'll create a risk profile that does this. And to me, black swan event is, you're going to see, I don't know, minus, what was it? We saw minus 700 in the NDX multiple days, and then you run over here, and then this turns into $1 million. So, that black swan means different things to different people, and that's the kind of stuff that I've seen. So that ratio of a -3 +5 further out in time, and those things will expand like nothing. For zero debit today, I'm looking at RSN's comment. Did an SPX zero debit 600 wide. Yeah, RSN, you'll have to let us know how that works. 4,700. Because the thing is, if we start pumping down there, your RSN, your -2, that could actually blow up against you, right? Without back testing 600 wide, I have no idea how that would work. And better one, yeah. When I said the -3 +5, we're not going to do any strikes or anything. That was just a type of structure that you guys can look up on your own, because I haven't ran that by Peter. But you definitely, you don't want to pay that much. It's definitely a debit situation, -3 +5, and that's just because if you blow through to the downside, and that's if we have something that's catastrophic, a humongous pullback. And to me, I've read a lot of books. They said, one data that I've seen is that once you make an all-time high, it usually and that's a crash situation that I was bringing up, and that's to me what a black swan hedge is it's, and I haven't verified this, but after an all-time high, typically a crash will come 55 days after that, somewhere around that range. So that's why I don't want to bring that up. Those are extreme situations, and will we have a pullback? Possibly. Will we go further up? Possibly. But are we going to have a crash situation? I really don't feel that right now. And I know there's a lot of people that want to be short and stay short, but right now, when we're looking at all these charts, they're looking pretty bullish. So, crash situations, kind of like the .com era and that sort of stuff. But if you want to look at black swan hedges, I'm sure you could go to YouTube and type in black swan hedge and pick that up. Better one. But you could see that we're kind of, we're still, even though that we made all-time highs, we're coming down and we're still chopping around. But the market's the market is holding up. You know, we're definitely bullish here. You know, we're above VWAP, so people are still buying, which is amazing at this levels to me. Yeah, crashes only happen when they're unexpected. Definitely. And you know, we haven't really talked about that in this. And you can always, you know, if you're unsure of any of this and that sort of stuff, if you see big candles down, the easiest thing is to do is buy put. Yeah, and Max B's, you know, similar thinking, you know, and I would, you know, I don't want to stick on this black swan hedge stuff, but you know, instead of using that term, maybe you could say short sellers. So people that are short, they're covering right now, right? And I can't believe it's hard for me to fathom that people are still short in this market because we're going up, and that's what happened because you know it was what was it last week Wednesday I think it was where we came all the way down and then we retraced the whole amount and went past went, and we just kept going up and I'm sure a lot of people blew their accounts out and then we continue to go up. So and as soon as all the shorts cover is the time that we start going down because short covering weakens a market, right? Those terms. Okay, anything else before we want to look at before we jump out, jump off? Before I jump off and then talk to you via text or typing. So Abe, I'm going to try to answer your question here. I don't have the best result for this, but so why does short covering create weaken a market? And I'm going to so if we're on the main screen, I'm going to try to draw this with the EpiPen. So if Abe, you could follow me. Say the market starts doing this. And this is kind of what happened on Wednesday. We're going down, we're going down, we're going down. So we're going down and people, you know, shorts are coming in here and they're like short, 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 short. And I'm just picking this level just because it's there. Right at this level, it starts to turn, right? Well, somewhere in here, shorts should be covering. Now, some of these shorts are losing money. They should definitely get out here, which happened on Wednesday, and then we went up, right? The day ends, the next day, there's still some people short. So they're losing money, right? So if you're short, you're a future buyer. So eventually, these guys have to buy. So where do they buy? A lot of times when we reach a certain point, And I don't know what that point is, right? But let's just say the points here is that they're all exhausted. The shorts throw in the towel. We're at the top or whatever. There's no buyers, right? Nobody's buying. So then the market starts doing this. And then it comes back and it looks for more buyers, right? Well, there was way too many buyers because all these guys covered short. And as the market comes down, once they cover, the market gets weaker. And then once it gets weaker, there's still some people that have bought in here as it's going down. Actually, as it was going up, sorry, said that wrong. Let's erase that. At the same time, there's people buying going up, right? So these weaker hands start coming out. And this is the different time frames, right? Because there's some people that are short from 2, 5, 30 days ago, and now they're getting out, and then they start piling in. As far as these guys that bought, they're starting to pile in selling. So now this is sell, 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 sell. So when shorts cover, meaning they buy back their positions from being short from down here, that's when this happens, this pullback. And a lot of times you want to see, and you can see this with profile, as we go up, that's what creates this taper. Sometimes you'll see minus a single digit, 8 contracts, minus 100, whatever, minus 3 digits, right? And then you'll see minus 4 digits, and that's the taper that people covered, and now it's coming down. And then you want to see how far we come back and see if there's support here. See where this bounces. So I don't know if that's the best example, but that's, how I look at it. It's on the fly. Hopefully that works for you guys. And basically, some people talked about it as that's emotional, right? Emotional buying. That's shorts and people getting long. And then the longs are getting stuck at poor location at the tops. Okay, with that, I'm gonna stop the recording. But I'll be here. I'm gonna stay on after the recording if anybody has any questions.